Welcome to ForexTV.com. It's Friday, January 25th. I'm Remy Hookey for New York Forex Market Buzz. In afternoon trade as of 1 p.m. Eastern Time, Euro dollar is at the 1.4670 level. Sterling dollar is trading at 1.9780, while dollar yen is around 106.88. In the New York afternoon session, U.S. equities are back down in negative territory. Given the overnight rally in global equities, there had been an increase in risk appetite. Now, ahead of the weekend, all eyes are on the January 30th FOMC rate announcement, as well as next Friday's non-farm payrolls data. Joining me this afternoon is George Davis, Chief Technical Analyst at RBC Capital Markets. Good afternoon, George.
Good afternoon, Remy.
Thanks for joining us today.
My pleasure.
Well, after a volatile holiday-shortened week here in the U.S., we're ending with a lot to digest. The Fed cut both the Fed funds and the discount rate by 75 basis points. Now, euro dollar has failed to hit a new record this week, although the pair hit a high of 1.4776 earlier today. The euro has now pulled back under 147. So, George, fundamentally and technically, what's your forecast for euro dollar?
Well, I think in terms of the euro, Remy, we're likely to see at least one more push to the top side. And the reason why we think that is because the ECB is still coming out with fairly hawkish comments vis-a-vis inflation and in terms of monetary policy. So I think as long as we have that overhang and the risk of at least one more rate increase from the ECB, I think we're going to find that there is some technical and fundamental support for the euro around the 145 area. So, I think as long as that threat is out there, we're likely to see at least one more push to the top side for the euro. But right now, the way it's setting up, I think it's going to be very, very tough for the euro to sustain a break above the 149 level. I think as we move up towards 149, the risk is we might start to put in another top.
Well, as equities fall in the afternoon session, we're also seeing dollar-yen decline below 107. We've seen plenty of risk aversion trades in play this week. So for the yen against both the U.S. currency and the euro, what levels will you be watching?
Well, in terms of key levels to keep an eye on, obviously the whole carry trade has still been a very important theme and catalyst driving the markets. When equity markets rally, we see the market become less risk-averse, and the carry trade tends to benefit, and vice versa. In terms of levels to watch, technically for the euro, we have support at 145.41, resistance up at 149.13, so basically sets up a 145-149 trading range over the next couple of weeks. And for dollar-yen, we've got support at 105.64 and resistance at 107.92.
Okay, let's shift our focus over to commodities. Commodities have been gaining again with NYMEX crude up above $90 a barrel and gold hitting another record high. And dollar CAD is ending this week near parity again, and risk aversion has been weighing on the Australian dollar versus the U.S. currency. So for traders of Aussie and CAD, what factors should they be watching?
Well, in terms of key factors, number one, for the Canadian dollar, I think the most important catalyst right now is not so much commodity prices per se as it is equity markets. What we're seeing is a very high correlation between how equity prices move and the Canadian dollar moves. In terms of when equities rally, we tend to see the Canada rally, and vice versa. So obviously this week we've seen a fairly significant price correction higher in equity markets, and that's allowed the Canadian dollar to gain against the U.S. dollar, and is the main reason why we're approaching parity here. And I think as we look out into next week, I think the risk is that we're likely to see a little bit more topside in equities. I think a key level to watch right now in the S&P 500 is the 1366 level. That resistance held on a test today, but if we do take that level out, I think we'll see an extension up towards the 1400 level for the S&P, and that in turn I think will drive dollar Canada down towards support that comes in right around the 99.11 area. And in terms of the Aussie, commodities remain fairly important in terms of the overall price action for the Australian dollar. But more importantly, I think monetary policy is still at the forefront here. The RBA is still talking fairly hawkishly in terms of its outlook for interest rates. And very similar to the euro, I think, as long as we have that overhang in the market and that risk of a rate hike, I think we're going to find some fairly decent support for the Aussie around the 86 cent level, and I think the risk is that we try and move back up and retest the 89.5, 90 cent level as we move into next week or the week after.
And last but not least, let's take a look at the UK currency as sterling hit a high against the dollar at 1.9847 today. So do you expect the currency to retest the $2 handle?
Yeah, I think there's some additional risk for some further gains in sterling, and I think what we've seen in sterling prior to last week was a very significant decline in the pound as the market basically repriced interest rate risk, in the sense that some of the latest data in the UK had come out on the weaker side of expectations, and there was the thought in the marketplace that that would force the Bank of England to cut interest rates. So as a result of that repricing of interest rate risk, we saw the pound sterling lose a lot of support in the market and sell off dramatically. But I think now that that scenario of lower interest rates is priced into the curve, sterling has moved to oversold levels rather, and I think the risk is that we're likely to see a price correction up towards that 2 level over the next couple of weeks.
Okay, George, as always, thank you very much for your insight and have a great weekend.
Same to you.
Thank you. That wraps it up for your Forex Market Buzz with George Davis, Chief Technical Analyst at RBC Capital Markets. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.